Hello, and good morning, guys. It's a lovely Friday morning. Today is the 10th day of July 2026, and this is what we were looking at yesterday. Yesterday, we were looking for high risk sales below this level, below this resistance here. We never got a confirmation for that. For the potential sales, we were looking for potential safe sales below this level. We never got a confirmation for that. What we got is potential buys. We are looking for potential buys above this level. Once this candle closed with very good bullish momentum, you can see the size of the candle. The size of the candle, very small wick. That shows some very good bullish momentum. That's bullish pressure. You can see the size of the candle here. So once you got this push up, this was my signal for a buy. So I was waiting for price to come back. You can see once it broke above our level, we left this. We had this very we have this very big fair value gap here, just exactly at the level where it broke up. So I was expecting price to come back to this level here. It could having that fair value gap here uh, meant that price might not get to our level here to retest our level. Remember, uh, we make our entries on the retest. It's break, retest, make an entry on the retest, take the market up. So I knew the market might not get to this level because of this fair value gap. So I had my entry on this fair value gap here. This is where I had my entry, and my take profit was this high here. I wanted it to take the liquidity above this high, which it did. So we were activated here. Let me show you that on 15 minutes. We were activated here by this candle here. This is where the fair value gap was. We were activated here. The market pushed up, hit TP1, and finally hit our TP2 there. So that's how we made some good 378 pips from here. From here to here, that was 378 pips. You can do your maths. With 378 pips on gold, you can see. It was 378 pips on gold. Made some good money. You can see a quick in, out. So from then, the market has just been consolidating around here. You can see the market has just been moving sideways. So today, let's see what we have today. So this was our second win. This was our second win of the month. We have executed how many trades? Three trades since the beginning of July. Uh, that was NFP. We executed NFP. Uh, the other one we got out at break even, and then this one that we have won. So that's three trades on gold since the beginning of July. So real quick, we're going to remove everything here. We're going to remove everything here for a fresh new analysis of the day. So remove, yes. But first, let's see what you expect on the fundamentals. Today is Friday, 10th July, and what do we have on the fundamentals? We have no high impact news coming out today on the USD. But if you trade the Canadian dollar, you have the employment change and the unemployment rate. These are reports that are coming out at 3:30 p.m. So watch out for that. Otherwise, today is it's a free market. No fundamentals driving it unless we get breaking news. Any breaking news from Iran or Trump could also lead to spikes in the market. So watch out for that today. Be in the know. don't get caught on the wrong side of the market. You can say gold sell off first. This was 11 hours ago. The explosions had in Iran's news agency. Okay. So watch out for the breaking news. If I were you, I would follow Trump's account to get his latest tweets as they are published. Okay. So let's start our analysis today. We're gonna do a quick one. Uh, as always, identify your area of resistance, level of resistance, and the level of support. That's our level of support down there. On the weekly, it has not changed. Our resistance, our most immediate resistance is this one. This is our most immediate resistance today. On the daily, we had this POS here. Uh, the market has not shifted. The market has not given us a shift yet, but we had this internal break of structure here. So this is what you're looking at. Still, our resistance is up here. Our daily resistance still up here. Our daily support is here. Until we break either above this level, either above this resistance or below this level, all all this here is just consolidation until the time that we break above this level or break below this level. Okay, all this is just consolidation. Just a minute. All this is just consolidation. So jump down to 4 hours, and on 4 hours, this is what we are looking at. We had this break here, another break BOS here, another BOS here. So this is the most recent, and it was taken out. So this was the most recent BOS. Then we had that shift here. We had a shift there. So our low, our 4 hour low is here. Is our 4 hour low. Our 4 hour high is here. Our 4 hour resistance is here. So when you get to 4 hours, I like to use the bodies, not the wicks. So use the body there, here. Also use the body here. But identify these levels. Identify these wicks as targets. Is where price could target, because there's liquidity here, there's liquidity above here. So identify these wicks as targets. So that's our 4 hour range. Is where we are on the 4 hour range. Internally, if you were to look at internally, but let's not get lost in that. So on 1 hour, this is the most recent. This was the last break of structure here. There's a break of structure here. Then the market shifted. After the shift, we've had a pullback. We've had this pullback here, and then the market pushed up. So this was a view. There was a break of structure here. There was a break of structure there. Market shifted here. After the shift, we had another break of structure here. shift break of structure. So our resistance is, support is down here. This is our support, and this is our resistance up here. Support, resistance. Okay, so that's what you have on 1 hour. Jump down to 30 minutes. Now this is where we get our entries. This is where we look for our entries. So on 30 minutes, on 30 minutes, we had this break of structure here on 30 minutes. Price came all the way up here. It hasn't broken above, neither has it broken below. Okay, so all this is just consolidation here. So what I'd be looking to trade today, unless we get no, so today this is what I'll be looking at. This is what I'll be focusing on today. Move that one to the body there. With all this consolidation, I would want to jump to 15 minutes because it's too noisy. It's too noisy on this 15 minutes, you see. Because if we were to look at 15 minutes, this was the last break of structure. There's another break of structure here. So on 15 minutes, this we've had a shift on 15 minutes. So if we break below here, if we break below this level here, we could be looking to get sales. But this area, let's see how big this area is. From here to here, that's 150 pips. Well, if you think it's tradable, you can take that trade here from here to here. But for me, uh, not worth the risk. So this is what I'll do. It's not worth the risk. So when we get to 30 minutes, we move that support to that level there. Identify this week as our potential sales below, and then identify this other week above here as our potential buys above. For those looking to take this trade here, this is how you could take the trade. Mark that resistance there, then identify this week here as your high risk trade sell. High risk sell there. So if you're looking to take this trade here, this is how you could take it. Let me see the 8 a.m. candle. Yeah, it's the 8 a.m. candle. So this is what you could take if you're looking to take this trade here. But for me, it's not an area worth trading. You see, it's not worth trading here. So here, these are no trade zone for me. These are zone that I should not touch. That's a no trade zone. So if we get the buys, should we get the buys, I'll be looking to push the buys all the way from here. Remember, it's break and retest. Wait for the break, wait for the 30 minutes candle to close above this level here, and look at the momentum. If it has good momentum, then this could be a good trade to take. If the momentum is dying out, remember today is Friday. A lot of fake outs happen today. In my experience trading gold, we see a lot of fake outs today on Friday as the week is ending. So watch out for that. Don't get caught. Don't get trapped. Don't get trapped in the fake outs. So these are the levels I'll be watching today. For the buys, if I get a buy, I'll push it up to here. Or if it has good bullish momentum, very strong momentum, then you could see a push up to this level here. If it comes if the breakout comes with good momentum. We could see a push up to here. And for the sales or the short positions, I'm looking for a sell below this level here. Stop loss just above there. If I get that sell there, these are the levels I'll be targeting. Target the nearest lows here. This is where liquidity lies. This is where liquidity lies. If you understand liquidity, then you got 50% of what you need in the market. You got the edge you need in the market. If you can't see liquidity, then you're the liquidity. That's what they say. If wherever your levels are, you can't see liquidity above or below it, then you're the liquidity. So that's what I'll be looking at. Let's not push it too far today. It's a Friday. Fridays are not my best day to trade. But if I get a trade, why not take it? Why not? Why not? We are here to make money. So make what you can and get out. Don't worry about the rest. Just make what you can make and out you go. So this is what you're looking at. Remember, always trade what you see, not what you think. Okay? The market does not care about the market does not care about what you think is going to happen. The market does not reward your very good analysis. The market rewards consistency, discipline, so if we get a push below, we could see a push down to this level. If we have some good bearish momentum, and but there was a break of structure here, there was a church. Yeah, so this is the area I would be looking for price to push to. I wouldn't want to push it below this level here, given the current geopolitical tensions and the ceasefire being lifted. Well, we could see some push up on the gold. So this is what I'm looking at today. I wouldn't take this trade here. I wouldn't. This area here is very small. So let me just remove it. Okay, just forget about this area here. Forget about this area here. I wouldn't trade it, but don't trade it. Don't trade it. Let me not advise you to trade that, because myself, I wouldn't take that trade there. So this is what you are looking at on gold. A break above with good bullish momentum, take the market up to here. If we still have some good momentum, the market could hit this level here, sweep the liquidity above here. If you get a break below with good bearish momentum, and you could take this trade from here, push it down to this level, just get out. That's a risk to reward ratio of 3. That's a risk to reward ratio of 5. But if we are to take our profits here, that's a risk to reward ratio of 3.42, which is very good on a Friday. That's very good. So this is what I'll be watching today. This is what I'm watching today. Remember, guys, trade what you see, not what you think. Risk management is always key. Exercise proper risk management. I'm out. See you on Monday for a recap of this. Ciao.